Good morning, everyone. Paul here with GammaEdge. Today is Wednesday, the 20th of April. 420 is not lost on us, by the way. Go ahead, pause it here. Please give this a good read. It's important. Starting with the overall indices, we're seeing market improvement as part of yesterday's action. We're seeing the net cumulative negative gamma dropping, and we're seeing the net positive cumulative gamma increasing for both the SPX, the SPY, and as you'll see here, the Qs and IWM. Of note, we're still not out of the woods yet. You can see the relative magnitudes of the net accumulation underneath the curves. And the bottom line here is that we need this to continue. We are prone to failure, but because of the market improvement, we are going to color things green with that cautionary yellow light because we're still not into a very dominant positive expiry situation here, or overall condition. Taking a look at the Qs, kind of the same picture. IWM has been just terrible. It did improve yesterday across the board. Same thing. Green with a cautionary there just because of the huge imbalance here. We still a lot of downside protection in place. We did not see the monetization that we thought we saw yesterday. We saw a lot of what we think is Vanna flows coming off. So as a result of that, just keep your guard up. Don't get out over your skis here. Taking a look at the 0 DTE for today, the terminology I like to use is we're between the goalposts of the minus expiration or minus GEX dominance here and the positive that you see here. And you can see we've called those out on each of these charts. A couple things to note here. Net positive expiry here by the green arrows. We've got a net negative expiry here in IWM. IWM's been broken for a while. Very clean transitions here. I would disregard this, what you see here. So a close today or a push today below the zero would put us back in fairly negative territory. We could see some downside pressure as these are monetized today. Remember, the SPY, the Qs, and IWM are cash settled. The SPX, or excuse me, equity settled. The SPX is cash settled, and because of that, there may not be the pressure in the SPX as the dominant market mechanism to actually see a force downward. But if we do see a call monetization, we could move downward, and just be aware of that. The line in the sand would be the zeros of these complexes. Taking a look at the market model via the cumulative tick, breadth is terrible. We did see some strength here in the filtered cumulative tick yesterday. This is the tick USC, the composite cumulative tick, but not overly strong. You can see we've had some really marked downside movements here over the last 5 days. This is not a raging bull, so just be aware of that. Historically, when we see a reversal off the bottom, it's prone to failure. We've been seeing this before, just to watch it fail. Again, we're not overly bearish or bullish on this. I will say longer-term downtrend is still intact. 3 here, we need a continuation to the upside to prove the thesis wrong. For this reason, we're going to color things yellow. Vol, we're right on the edge of not having, or right on the boundary of not having an edge, but because we did drop below the midpoint of the Bollinger and we are seeing a reduction in the collapse of the VIX on the overall range, VVIX that is, and now the VIX is below the midpoint of the Bollinger. Looking at spreads to play the downside could be a way to do this. For this reason, we're going to color this green. And again, don't get out over your skis, but something to look at. Taking a look at the different zeros that are in the SPX complex, we are above the zeros, which is positive. Note that the wings notwithstanding in the previous graphs, and note that we're very, very close to these levels. Any collapse below 44.36 into the afternoon session would put us back in the muck and not very positive. So for that reason, although we're going to color it green for now, we're going to throw that yellow cautionary up. We need to see a continuation up, starting to advance to 4,500 and points north. The June contract on the ES Pre-market, we're bouncing right against this 4480. That's a good sign. If we can get above P-trans here in the ES, we could potentially move up, and you can see some of the near-term targets are actually up at 4,700 for the June expiry. Still a reduction in the VIX overnight. That's a good thing. 4461 is where one of the zeros is located. We have another zero down here at 4409. That would be the absolute line in the sand. Just keep an eye on the ES. We're going to color this green also with that yellow in there. If we can't get over P-trans here at 4480, look for a rejection and play the downside. On the SPX, expiration here, very, very different change than what we had yesterday. The key here is that we're weakening down here in the end of month, starting to see the collapse of everything. Everything is concentrated in the short term. Net positive expiries could be fuel actually to a downside as calls are monetized. So just be aware of the cause effect there. Taking a look at the 0DTE here on the left and the combo complex, which is the AM and PM settled only. We do not combine the SPY into our combo. Net positive expiry, but extremely weak on the SPX, right? We're right at the zero. So guys and gals, if you're looking, all excited about, now we're in a net positive gamma environment, no, we're not. We're barely above transition. It's a very weak amount that we're here. 4,500 becomes the initial target to the upside for the SPX. Downside, you can see there's a few areas of liquidity that are down here all the way down to circle 4. But overall, we've got this transition range between 44.10, 44.45, not overly exciting. And then I've just highlighted different areas of liquidity that we could see if we do push through the 4,500. Note, expected move is up a little bit higher today. Drawing our attention over here to the 0DTE, net positive, fairly strong for today on the positive expiry side. And that's pretty important. You can see up here at circle 4, which is the 45.35 area here. Above that area is not likely, but this is the dominant expiry on the call side. I did highlight here where you see the 8. We could push into that range, and I think we'll stall in that range if we do go up to that area. This is where we closed yesterday here at circle 5, downside 4,400 at circle 6. Very clean transition. This is a zero of the complex for the expiry. Parking there into the overnight, into the end of the day would not be a surprise to us. So when we take a look at what are we looking at in terms of the overall, possibilities, we call these trajectories. The 0DTE, we're watching this net positive expiry that could put downward pressure on things, and with some plays to look at there. Within the Discord, play your symbols, take a look and watch what's happening there. We do think the call monetization could put downward pressure on prices, so just keep an eye on that. Play the upside, though, as we start approaching the positive gamma from underneath. Take your profits as you see necessary. With respect to the VIX, we are watching that volatility of vol reduction and having that coincident with the VIX. The setup is the decrease and then play possibly a put debit spread or some structure to capture decreasing VIX on the downside. We see that more or less if we can get a continuation here into the end of the month, so just watch that. Taking a look at the cumulative tick model overall, we did attempt yesterday, obviously, this rally. Major off the bottom, but it was right from the beginning of the day. Those are prone to fail, so I would be very, very suspect of if we don't get a continuation here, then short the bounces on any divergence. And so we're looking for that. If we do not get a continuation pattern, if we get a continuation but the tick starts doing something opposite of what the CompX or the SPX does, I would look to go in the direction of the divergence. And then finally, the lines in the sand. A lot of numbers here. I know we've had some feedback that folks want to have this list, and so I've expanded it here. The key things here, pushing upward. The key levels for today, you can read this yourself, but I think we want to play the upside to the positive gamma exposure levels, and then if we get a rejection off those levels, play the downside. So with that, we'll draw it to a close. If you like today's content, please join us at GammaEdge.us. That'll take you to a sign-up page, which will get you into the Discord. All the tools turned on. We'd love to have your contributions, and we've got a great group of traders there who are calling out things left and right, and helping everybody integrate this in with your trading style. Follow us on Twitter, please, at GammaEdges with an S, and then of course you're watching this at YouTube. If you like today's content, hit that like button, please. Subscribe to our channel so that you can get notified of the next time we post something. So with that, make it a great hump day. I hope everyone has success, and we'll see you in the Discord.